Welcome back to iInvest News. So, what I wanted to talk about today is the AC countries and its relationship to the Africa Free Trade Zone. Excuse me. So, imagine a busy market. One stall changes prices every hour, another stall keeps prices steady and clear. Big buyers always choose the steady stall. Right now, Africa is that first stall. The uncertainty in pricing. Africa Continental Free Trade Area, otherwise known as the AfCFTA, that's a mouthful, wants to turn Africa into the steady one, just like the ASEAN in Asia. After new U.S. tariff hikes, AfCFTA and ASEAN trade officials are pushing harder for clear, common trade rules to protect their countries from wild currency swings and sudden tariff shocks. 1.3 billion people live inside the Africa Free Trade Area. That GDP is $3.4 trillion. It's the size of a G7 country. 40 to 50% tariffs hitting some exports from Asia and Africa going into big markets. Before, every country made its own rules and surprise tariffs. Now, the AfCFTA style teamwork with clearer rules that can lower borrowing costs and calm currency moves. So what we're saying is that if right now it's, wild, wild west, today, that's what's happening. What we're looking to work towards is this teamwork approach that has clearer rules and can lower borrowing costs and reduce the currency volatility. Why does this matter, and specifically to people like you? Well, it changes the rules for private banking. When rules are clear, governments pay less to borrow and banks can offer better loan rates. There's also a tax strategy implicated. Fewer surprise tariffs mean fewer sudden tax hits on company profits and cash flow. And let's not forget, more stable currencies and trade rules make it easier to run businesses and hold bank accounts across several African countries. Here's what you need to do. Look for your smaller AfCFTA countries that act like Singapore and ASEAN, tight rules, strong contracts, stable trade policies. The next question would be, what countries would that be? I believe you've got a couple of countries in East Africa. One would be Kenya. The West Africa country, I hate to say it, but would be more like Ghana because their import-export rules are pretty clear. So how you trade with them is a little bit more stable. Another place is Benin Republic. So those are some samples. Ideas for you to continue to educate yourself. Read rating agency reports for words like policy credibility and AfCFTA progress, not just high growth. That language often signals lower risk and better pricing. If you want to read the entire article, please go check out www.i-investmagazine.com.